Hey, good morning. Let's go over today's trade plan. So we saw in the overnight session that responsive buyers were active near Friday's low of day, and overall heading into the open, the market is very balanced and two-sided. And if we look at the last 3 days, we can see that the market has been consolidating within a range. Now, given that the short-term trend is still to the upside, we're going to continue favoring the longs, but with the understanding that this is right now a sideways market and we need to see broad market strength and sustained upside momentum in order to get a sustained breakout. So if we're not getting any upside momentum near pre-market resistance or near Friday's high, then it could simply be a failed breakout attempt or the breakout may not even take place. So we do want to see that upside momentum in the market, and without it, it's going to be very difficult for ES to continue going higher. At the same time, because the market is so two-sided and we are stuck in a range, if responsive sellers are active near the top of the range, either at pre-market resistance or at initial resistance, then we can continue to balance and the market can come down and test the bottom edge of the balance. So the initial support zone, 82 to 84, is a good area of support, but if we're coming down on heavy downside momentum, the area would call for caution because we do have that open gap and naked VPOC right below. So below initial support, we have a HVN at 78.5 to 80.5, which is an important area for the market to hold. And then 75 quarter is going to be the short-term bull bear line in sand. But really, if the market is going to go higher, then ideally you want to see it holding above 78.5 to 80.5. So on the downside, we have support at 82 to 84, but it is going to depend on the type of environment we're seeing in real time in order to determine whether it's worthwhile to actually trade that zone. So like I said, if we're coming down on broad market weakness, a downtrending and very negative AD line, and momentum sustained on the downside, so NYC tick holding below zero, then 82 to 84 is going to be a higher risk zone to fade, simply because the market could go down to fill the gap at 79 quarter, test a naked VPOC, and then perhaps it can attract responsive buyers off of that area. Because right now, the way the market is structured, even if we came down to 78.50, or really even down towards 77, it wouldn't necessarily mean that the market is going to completely reverse. It would certainly signal a lack of strength, but at that point we would be testing the bottom of the recent short-term range around 75, 77, 78.5, and as long as it's not a trend down day, responsive buyers can still be active on a pullback over here. And like I said, on the upside, if we're seeing broad market strength and we're seeing that sustained upside momentum, then 96.75 to 99 can be tested. At this point, this zone may not hold simply because the market has already balanced ahead of it. And we'll have to look at the underlying relative volume to determine the type of range we can get on the day and just the level of broad market strength we're seeing in order to judge whether the market has enough behind it to push through the initial resistance zone, or if there's kind of mediocre momentum and the AD is not really all that positive, then 96.75 to 99 can still technically attract responsive sellers because it is valid resistance until broken. So you can see that heading into the open, it's a very mixed environment, and for that reason, I think it makes sense to be a little bit conservative and be aware of trade location and understand what your edge is when you are taking a trade. So, like I said, right now, off these higher prices, you need momentum. So, if there's no momentum and the tick is very flat or negative, then it's going to make sense to sit it out and not get involved on the long side, and depending on how the market's shaping up in real time, maybe even consider shorting the market for a small trade, because right now it is very mixed, very two-sided, and it really can run in either direction, and that's why we really need to focus on the environment in real time, right? Whether there is enough strength to really carry the market higher, or is there outright weakness, in which case it might make sense to short the market, targeting the 78.5 to 80.5 area. So that is the market that we're in right now, very mixed, and that's why the overall bias right now is neutral, and we're open to taking trades in either direction, but because the trend is still to the upside, at least the recent trend, we still want to favor the long side, and that's really going to be the side that we still want to focus on. But it doesn't mean that there can't be a good short. It's just that if there's going to be a good short, again, understand what your edge is. Either you're getting good location, or there should be enough momentum to support the trade idea. And then on the downside, the target would be 78.5 to 80.5, with the understanding that responsive buyers can still defend the bottom of the recent short-term range, and we can simply kind of balance here and just go right back up. So those are the main thoughts heading into the open. Let's see if the buy side can maintain control on the day time frame here, and we'll take it from there.